It's time now to welcome in Peter Tchir, Head of Macro Strategy at Academy Securities. Peter, thank you for joining us here.
Yeah, thanks for having me.
Absolutely. Now, let's look at the big picture first. How are you feeling about the market right now as we head into CPI tomorrow?
I'm not overly concerned about CPI. I think if it comes in hot, yes, that makes it 25 bips. If it comes in a bit light, we probably still get 25 bips. So I think the data isn't going to be as important. The Fed has a pretty high hurdle to hike very often, and they have an extremely high hurdle to cut. So I think they're taking second fiddle, and it's really going to be about earnings this quarter.
I have to ask, though, before we get to that, do you expect another rate hike regardless of the inflation data tomorrow?
Yeah, I think we get 25 bips at the next meeting, almost regardless of the data, just because they've set the table for it, the market's priced in. They'd almost be foolish not to take it at this point, and that gets that whole conversation about skipping versus pausing, et cetera, off the table. So I think it's a smart move by them. They'll take what the market's giving them, and that's, it would have to be a shockingly low inflation number tomorrow to change their mind.
Okay, so since you mentioned earnings, let's talk about that for a moment. We do have it right around the corner. Do you expect AI to dominate the headlines the way that it did in the last earnings season and maybe the one before that too?
I think it will, but I think people are going to want to dig in a little bit more and figure out, okay, who's really benefiting? How is AI working? Are the companies that are saying they're going to use AI showing any benefit? So I think it's going to be a higher hurdle to move the stock prices. Some of the AI companies themselves have jumped, so much. What I really am looking for is, do companies start talking about that they're gaining efficiencies from using AI, whether it's in their strategic planning or something on a tactical basis? And I think that would be good. And the beneficiary might be the broad market. If we can start saying, hey, the people who use AI are going to see efficiencies, maybe we can take the entire stock market higher. And that's something that hasn't happened until recently. I think you mentioned earlier on the hour, the Russell 2000's finally outperforming. You're getting some of the equal weight S&P and the equal weight NASDAQ ETFs outperforming. I think that's the next leg of this rally. If we get it, it's going to be earnings driven and people kind of seeing progress on AI.
Peter, you're spot on with that. I see more people going prove it with AI now than they are, I guess, leading into the hype that we saw of it. Maybe it's not hype, but it certainly was a very new surge that it presented, as it was a new flavor of the month, so to speak. But let's switch gears now to the chip and commodities war. You feel like there's been a possible run-up to another commodities war. We are seeing a current chip tit-for-tat spat happening between the United States and China. What are you thinking about this right now?
So I think quite simply, we've been talking this about a couple of years ago, the U.S. has had this great vision of where we want to get in terms of sustainability and no plan how to get there. I think China has no vision on sustainability, but had a great plan to secure the resources we might need, and that extends into the chip industry. So they've been collecting the rare earths and critical minerals and not just sourcing the products. They're actually the leader in most of these in terms of refining them into something that's useful. So we're behind on that. I think it's going to start to catch up. And just last week, China restricted exports on 2 rare earths and critical minerals. We're launching the National Defense Act. So all these people who think that somehow, whether it's Yellen and Blinken, we're going to change this narrative and be on good behavior with China, I think there's real friction, and it's going to be about all the resources that we need for sustainability and chips. And I think that's going to affect our relationship for years to come, and it's not in a good way.
Slight curveball here, so prepare yourself. I wonder how the large companies that have been strengthening their relationships with China, like Tesla, how does that impact what's happening between the U.S. and China, if at all?
I think the one thing at Academy Securities get to work with a lot of retired generals and admirals, and we often talk about business follows the flag. And traditionally that meant the U.S. would plant its flag somewhere and create a climate that's conducive to business. And I think the U.S. has been pulling their flag. And while Tesla and some companies have embraced China, I think a lot of companies really are saying the IP theft was greater than we thought. China never really opened their markets to us the way we thought they could or they would. And finally, I think this is starting to catch on a little bit more. I think companies are starting to get concerned that the Chinese companies are going to start trying to sell their brands globally. So whether it's BYD in the EV space, which is building a factory in Brazil, I think the next stage of this competition is China not going from making our products to trying to sell their own brands, especially into emerging markets countries where they have trade deficits because they're buying so many resources.
That sounds like a picture of how it may affect the economy. How briefly do you feel like it may impact markets more near term?
Near term, I think it's very difficult to see how this is going to play out, right? I think this is a 1, 2, 3 year phenomena, so it's not as important. I think one thing, I like EM. I think EM is going to benefit from this, right? EM is not going to have to be as dollar dependent. They're going to be able to do more on the yuan. So I think my best way to play this is actually getting long emerging market stocks and just, closing your eyes and leaving that for 6 months, a year, 2 years, 3 years. And away from that, just be very careful. I think study your companies that you're investing in, who's overly dependent on China and who's more independent, who's already thought about ways of moving away from China. And that's where I want to put my bets.
Brilliant points. Peter Tchir, thank you so much for joining us. He is of
Thanks a lot for having me.
Of course, of Academy Securities.